It's nice to have you with us on Morning Markets this morning. I'm John Ehrlichman sitting in, and we are watching a market that continues to look enthusiastic with North American equities getting to all-time high territory. Part of that is the profit picture, and yet what is the profit picture going to look like depending on the trade narrative? Obviously, we continue to watch that story closely. Our next guest is, too. Bill Blain is author of The Morning Porridge and founder of Windshift Capital and a partner at Shard Capital. Nice to have you with us, and I guess I wonder, when you think about what's top of mind for you, even though the market's at an all-time high, how does trade factor into your thoughts these days?
Well, good morning, John. One of the key things I think we're going to be watching this week is trade negotiations. It's only, 10 days before the next Trump deadline, and that is particularly weighing on the minds of both Europe and Japan. Now, as far as the Europeans are concerned, you've got to remember that we have a very difficult process in reaching any kind of swift decision-making or agreement or anything because of the collegiate nature of Europe. All the nations have to get involved. But it's clear there are moves afoot throughout Europe, especially in Germany, to try and get their economies going again. It's very interesting. If you speak to German businesses, they're saying, yes, we would love to have a trade agreement with America, but not at any cost. And of course, that's what Trump really wants to get, is that Trump gets everything knocked out for US tech companies and let them do as they will, but wants to still put hefty tariffs on European steel, cars, and pharmaceuticals. And so I am very doubtful that we'll see a significant European trade deal done. And I'm also very doubtful we're going to see a Japanese trade deal done in time as well, because the dominant Liberal Democrat Party in Japan just got beaten in the elections. They will still be in government through coalition, but as one of my pals was telling me this morning, Trump doesn't deal with losers. So that isn't going to help global trade. And then if you reflect that back to the extraordinary levels that stock markets are today, remember this week we're in the middle of earnings season and we're going to have companies producing, I expect, pretty stellar numbers as we've already seen this season. But these are all looking back. These are numbers that look back. They don't account for the effect of tariffs that's still to be felt in the economy. And that's where the real problems of potentially higher inflation and slowdown is going to come. So although we haven't seen any negativity yet, that doesn't mean it's not going to happen.
That's really helpful context, Bill. You know, as you were saying all of that, I thought about the way markets respond to outcomes. You know, if it's earnings, they, like a company meets expectations, or they beat, or they miss. And, with central bank policy, the central bank lowers interest rates, or they leave them the same, or they raise interest rates. With the trade story, because we've now had a lot of time to sit on it, you sort of outlined a scenario where maybe some countries have some trade deal. Maybe it's not the best for, that particular country, but just getting it done, the market responds to that. Maybe you don't see a trade deal, to your point, because it's just not favorable enough from that country. How does the market respond to that? And then how does the market respond to sort of a collection of different trade deals? So where do you think our sort of collective market thinking is on those various outcomes?
Okay, so I think there's a general feeling that Trump is going to taco again. Taco, of course, being Trump always chickens out. I think what will happen is he's very much hoping that he'll be able to strong-arm trade agreements in place. And then they're not going to happen, and he'll find a reason not to go the full hog. The problem is, if he tries to put trade agreements or trade sanctions on Europe, the very high levels he's talking about, the Europeans are going to retaliate, and it will take them a long time to pull back. And so there is the chance of escalation, as we saw with China. But China, of course, had that secret weapon they could play, the rare earths game that they could play. Sorry about that, phone just going off. And then, of course, we've got this inherent instability in the States just now as well that's caused by all this ongoing debate about whether Jerome Powell's going to keep his job or not, which is making people highly nervous of the bond market. And of course, in the bond market, there is truth. And so that's why this is particularly interesting to watch what happens this week.
And then I guess a final question, it's not a short one, I suppose, in terms of how you could answer it. But what's been interesting about this year is as we entered it, there was a question about whether the best performance for investors who might be parked here in North America is beyond these borders, to look internationally. And, maybe after some huge gains for the U.S. markets for the last couple of years, it was time for an opportunity elsewhere. And that was playing out in a lot of markets around the world, arguably has still played out that way. But of course, since the post-Liberation Day sell-off, investors have really come back to the U.S. market. Now you've got all these strategists on Wall Street are saying, like, don't fight that trend. The earnings look good. USA, USA. So how do you think with all these moving parts for the trade story, the story of where you invest globally in stocks, what do you think that's going to look like for the second half of the year?
Hey, John, you just asked a very, very big question, and there is only a very big answer to that question.
All right.
But to keep it short, we are seeing major shifts occurring in the way that global economy works. And it's not just in terms of the old G7 alliances getting broken or diminished. It's in terms of where future trades go. And there are really a couple of factors at play there. The most important thing that drives successful economies is how swiftly they innovate, how swiftly they create new technology that becomes critical and everyone has to buy it. That's what's fueled American exceptionalism over the last 30 years. That and the abundance of capital that's enabled the US to fund these things. But eventually, of course, all things get tired and they come to an end and things start to change. So there's two things going on for Europe, which is piggy in the middle here. Europe's saying, oh, our trade relationship with America is going sour. Where are we going to trade in the future? Well, that's not China on its own, but the whole of Southeast Asia. That's where the bulk of the world's middle-class consumers are. That's where the wealth is. So they want to trade into that. And that means doing more business with Southeast Asia at the same time as it's becoming clear that China is no longer just aping the technology that we do out of the States and in Europe. They're coming up with their own tech solutions that sometimes, as we've seen in EVs and also the way they've mass-produced renewables, they're coming up with tech that is challenging, better, cheaper than US tech. So maybe we're a major change there. Now, I can see this happening quicker than people expect. It's not a 6-month trade. But at the moment, most people are underinvested in China because they've been nervous about the degree of authoritarianism bringing down capitalist tech entrepreneurs. And they're saying, oh, you cannot trust a market like that. Well, you know what? Take a look at what's going on in the States just now and see, do you really want to be trading with a company that is switching policy, a country that's switching all the time? So that's making, I think, the arguments for investing in China and Southeast Asia more important. And that's why I think that's the big decision for Europe. It's not a question of all or nothing, but they've got to think about it.